We can observe that in the fight between cryptocurrencies, some of the evaluated currencies lose value and never recover, while others maintain their worth for a long time. As a result of the winner-take-all dynamics, winners and losers emerge and a successful currency becomes even more successful. Hello guys, welcome back to CryptoPoint. In today's video, we'll put two cryptocurrencies against each other, Cardano versus Solana. Which one do you need to buy? So make sure to stay until the end to find out which one of these is the best crypto to invest in. Also, don't forget to subscribe to our channel for more exciting videos. So let's begin. Cardano is a smart contract-enabled third-generation protocol that enables the construction of a decentralized finance or DeFi ecosystem. Developers can create unique applications for their users, which is comparable to Solana in some aspects. Despite being marketed as a third-generation blockchain, it promises to overcome the same scalability issues that Solana does. What sets Cardano apart from other cryptocurrencies is that it's built on the Ouroboros consensus mechanism, which is based on peer-reviewed research. While Cardano is a powerful blockchain protocol, Solana has grown in popularity because of its far faster transaction throughput. In this video, we'll look at the distinctions between the two blockchain systems to see what makes them special and worthwhile to invest in. Let's get started. Cardano. Cardano was built by Charles Hoskinson, the co-founder of Ethereum, who formed Input Output or IOHK, a blockchain research firm in 2015. This organization's brainchild, Cardano, was co-led by Jeremy Wood. The organization's goal was to develop blockchain infrastructure for private and public clients. One of the most intriguing features of the protocol is the mechanics behind it. It plans to boost transactional throughput by implementing RINA or Recursive Inter-Network Architecture, a method that divides the primary network into numerous subnetworks. The subnetworks then communicate with one another. Let's take a look at the fundamentals of the blockchain. Cardano utilizes the Ouroboros consensus process, which is a verification technique designed by the Cardano Foundation, as previously mentioned. Users can stake their ADA, the native token used within Cardano ecosystem, and participate in the transaction validation process as a result of this method. Users can either create their own staking pools or delegate their ADA to one that already exists. The user's stake only needs to be present when the snapshot of the network is taken, which distinguishes this technique from the POS. They're allowed to move their stake ADA around it and engage in DeFi before and after that snapshot. This is not the case with standard POS because coin stake can only be withdrawn when the unbinding period has passed. Smart contracts are programs that are stored on a blockchain and run when certain criteria are met. The terms between a seller and buyers are defined in code in smart contracts to ensure that the outcome is certain without the need for an intermediary. Transactions are recorded and immutable, and the code regulates their execution. Smart contracts can also automate a workflow by triggering actions when certain circumstances are met. Programmability. Until this year, one of Cardano's most important features was its absence. The blockchain was exclusively utilized for transferring value from one location to another until the Alonzo hard fork, which was resolved just a few months ago. However, since the smart contracts capability was enabled this year, there has been a resurgence of interest in the blockchain as individuals realize its potential. Now we're hoping to witness a rapid development of the DeFi ecosystem on Cardano, which has been missing thus far. Updates. The protocol's base layer, which was shortly be separated into Cardano Settlement Layer or CSL, and a Cardano Computation Layer or CCL, is expected to be one of the most visible upgrades, CCL. The goal of this split is to offer an extra layer that makes it easier to understand why transactions are being moved. This contributes to the creation of a blockchain that's more transparent and trackable. While Cardano stands out as a groundbreaking, peer-researched and created blockchain, it has not been without its difficulties. One of them is the delay in upgrading, which has caused the project's total implementation to be delayed. Cardano's presence in the larger ecosystem is questioned by the fact that the smart contracts functionality was only recently added when numerous blockchain protocols already provided. Solana. Solana is a Layer 1 blockchain system with a consensus mechanism based on proof of history or POH. It's based on the verification of the time difference of two blockchain occurrences. This process runs before proof-of-stake consensus, allowing the network to handle over 50,000 transactions per second and scaling up to 100,000 transactions per second. Solana doesn't require Layer 2 scaling solutions because all of this computational capacity can be simply achieved at the blockchain's base layer. Here are some key characteristics of Solana which makes it stand out. It now has over 1,000 validators in the network, an increase of about 100% in just a few months. Over 75% of the SOL tokens have been staked, indicating that the network is now very resistant to attacks. Solana's DeFi ecosystem is expanding at a significantly faster rate than Cardano's. This is understandable given that it improves total transactional throughput. In the ecosystem, more than 200 projects have already been launched, with many more in the works. Its TVL has been constantly increasing as well. Recent developments such as FTX.US announcing the construction of a specialized NFT marketplace in the blockchain are also assisting it in gaining traction against its competitors. The fact that a big exchange such as FTX is aiming to develop a specialized marketplace in the protocol speaks much about the protocol's popularity. DeFi ecosystems. Ethereum, the most popular protocol for decentralized finance or DeFi, has ushered in a new era of financial solutions. DeFi is expected to grow at a fast pace by 2021. However, Ethereum's inability to scale and high transaction costs limit the DeFi space's future growth. In this area, blockchains such as Cardano and Solana can benefit and continue to accelerate DeFi adoption by proving faster throughput and lower transaction costs. Cardano's recent incorporation of smart contracts is critical for the project to play a major part in the DeFi's growth. The project is now on a mission to grow its portion of the DeFi market. To help achieve this goal, Cardano's venture capital arm Emergo is spending $100 million to help the Cardano DeFi ecosystem grow. SundaySwap is a decentralized exchange that aims to be the main DEX on Cardano, akin to Uniswap. Solana is gradually establishing itself as a center for DeFi DApp usefulness. This year, Solana total value locked TVL increased from $900 million to almost $10 billion. Two Solana-based companies, Port Finance and Solend, are trying to act as decentralized banks. With a TVL of roughly $200 million, Port Finance is one of the biggest DeFi DApps on Solana, and it works similarly to the Compound and AV protocols. Solend is another of Solana's DeFi banks, but it has a lesser TVL of $90 million. Many of the same assets are available in Solend as they are on Port, with the addition of Radium and Ethereum, allowing people to borrow against a wider choice of assets. Cardano pros and cons. So let's go over the primary advantages and disadvantages of each. So starting with Cardano and the pros, we'll go over 3 pros and just focus on what we believe is their largest flaw. The first is that it's a rock-solid, peer-reviewed platform. That's been years in the making and was well planned. Cardano, on the other hand, has a sizable investor community. You'll also observe that whenever there's a drop, Cardano's price seems to hold up nicely. When compared to Solana, the price doesn't drop nearly as much. And number 3, we believe Cardano has a lot of potential. It'll be fascinating to observe how it develops in the next few years. And we'd say Cardano's main flaw is that we feel it to be quite slow-moving. So it took more than 5 years to bring smart contract capabilities online, and we wish that projects and developments would come more quickly given that Bitcoin is a lightning-fast market. We don't want Cardano to be left in the dust. Solana pros and cons. One of Solana's main advantages is that it's lightning fast, and we believe it now the quickest blockchain available. The second factor is the price. You can't deny that its transaction costs are fractions of a penny, make it one of the cheapest on the market. Its applications are ranked 3rd. So far, it's made a significant dent in DeFi, and it's moving at breakneck pace. Its main flaw, we believe, is the fact that it crashed a few months ago. As a result, the network's decentralization and security are in doubt. Bottom line, there is no denying that Cardano is a powerful blockchain, and the founders have been laser-focused on decentralization during the years of development delays. It has, however, failed to have the same impact on the ecology as Solana. Various hackathons have been held by the latter in order to attract both developers and users to the platform. Cardano too wants to speed up the development of the DeFi ecosystem. However, Solana is favored in the ecosystem because it provides high transactional volume and reduced prices. This, however, could change. So that's it for today's video. Don't forget to like and subscribe. Also, let's know in the comments which one of these you would buy.